Welcome to Wall Street Confidential. I'm back with Jim Cramer. Good to see you, Jim.
It's good to see you.
All right, so let's get started on KeyCorp. It's been in the news of late, of course, tax problems related to leasing.
Right.
And talk about this bank in relation to what's been going on with consolidation in the industry.
Right. As long as I've been trading the bank stocks, the first stock that you always bought, if you felt there was going to be a wave of mergers, and the one I suggested to buy, candidly and wrongly, after Commerce Bank, although I later said no, I lost some points there. After Commerce Bank buying by TD was Key, because Key's got this footprint nationally. And Key had always been a very conservative lender. Mm-hmm. It was one of those companies that I always felt didn't take any risks. The fact that, and then they blame this leasing thing. They have so many bad loans. They were blaming it, it's like these banks, it's like, they should just say, look, things aren't going well. Don't blame some court decision. But the reason why I think Key is so important is because it shows you that other banks don't see any value in banks. That there should be some bank that wants to crack into the American market that just goes and swoops down and buys Key now. And now they can't even find a capital infusion. I suspect that capital infusion will be a lot like the Nat City and Sovereign infusions, which means they're going to get the edge on you if they're big. Like the Nat City one was one of those. I mean, I don't like these things because what happens is, as opposed to the Royal Bank of Scotland rights offering, what they do is they just call a bunch of large holders and say, listen, we're putting a piece together in the whole. Do you want to be a part of it? And if you're a small holder, you get hurt. So my bottom line is that the problems with Key are really writ large the problems with banks. Nobody wants the ones that aren't doing well, which would be Huntington Bank's not doing well, Nat City's not doing well. Comerica's not doing that well. Obviously, we know that cities aren't doing that well, but they're too big to be bought. But this was a cautionary tale, Key, because what it says is even the ones with the best national footprint are not interesting to banks.
Could it be that Key is so unattractive because of what we're seeing with Bank of America and Countrywide and how that pairing is kind of going to the wayside?
Yes, I think that's true, that everybody feels like that when you do buy something. And there's no doubt in my mind, I'll just say it point blank, there was a really bad mistake for Bank of America to buy Countrywide. They should have written off the first $5 billion because Countrywide has the ability to bring down Bank of America. I know that sounds impossible, but I saw many things impossible in 1990. Bank of America could be destroyed by Countrywide.
All right, and you think there are more Key banks out there?
Oh, yeah.
This is not the
maybe
end.
PNC's a Key bank, maybe SunTrust's a Key bank. I don't know. I mean, there's a lot of bad lenders out there.
All right. Thanks so much, Jim
Thank you.
Cramer. Your column is on Real Money. Also, Deborah Borchardt has a great story on our
Yes,
street.com website. You're watching Wall Street Confidential. Stay tuned.